All right. Here we go. A couple more people joining. What's up, Matt? All right, we're gonna go and get started. So, right off the bat, I get off all vocal feedback. So, now if y'all have any questions, please don't hesitate to let me know. Yeah, just let me know. And if you want to make any comments, just let me know. So, first of all, I went ahead and made this diagram just for you all to reference. So, when we talk about outcome candles, first of all, we talk about that for the most part, in their most basic form, they're usually engulfing candles. So, they're going to look like this. So, say you're going to have a sell candle right here and then a buy candle. Y'all, please do not mark up the screen. And you're going to have a buy candle right after. And when you have that, you're going to put your buy limit, right here at the open of this candle, and then the stop loss at the close of it. Now, when you want to sell it, all right, Chris, hope you're doing good. Now, when it comes to sell limit, it's going to be the same thing, except pretty much the opposite. You're going to have your sell limit right here, as you see it's an engulfing candle. So right here, and at the top of the candle, that's where you're going to put your stop loss. That's the outcome candle in its most basic form. Now, I'm not don't want to confuse y'all. There's some scenarios where it's not engulfing, but that's more in-depth stuff. So I'm going to try not to confuse y'all with that. So right off the bat, there are three confluences to finding an outcome candle. Does anyone know what they are? Y'all can just unmute yourself and say it, or y'all can put it in the chat box. I don't know where my chat box went either, but it's okay. There it is. Take out liquidity, Solomon, that's one. Anyone know what the other two are? Y'all can just speak in the mic. All right. So first of all, y'all can go and feel free to screenshot this diagram here for y'all, but y'all can also screenshot this. So there are three. Number one, like Solomon said, you're looking for liquidity. If I can type. Liquidity in its basic form is just like support and resistance. So you're thinking of, retail traders, they see a support line or a resistance line. That's the first thing you're looking for. That's what like the basic retail trader is looking for. Now, the second confluence is for it to take out the liquidity and what is called the impulse move or inefficiency. Pretty much the same thing. I call it impulse move because the inefficiency is the impulse move. And I'll give y'all an example of this in a second, so I'm not gonna leave y'all dry. Number three. Anyone know what the last thing you're looking for is? Large volume and momentum. Not quite. So you're gonna look for the outcome candle, an outcome candle that captures liquidity specifically. Yeah, very sad. OC. These are your three confluences. So here's what your outcome candle looks like. Sorry, Joshua, unless you want. Hey, Joshua, how you doing? All right, so this is what you're looking for. This is your three confluences, and this is what your outcome candle looks like. Now, the OC itself does not have to capture liquidity, but that's actually a fourth confluence. 4 and 5 are not required, but if you see these, it just it helps you to guarantee that, hey, okay, this is possibly an even better sale. So number 3 is going to be just the OC. Number 4 is if the OC itself captures liquidity. And number 5, I'm not going to get into a whole lot because it's not that complicated, but it's kind of hard to explain. But basically, the OC is going to fall on your fib lines. And the fib lines I'm referring to are the 0.786 and the 0.88 fib lines. If I find an example, I'll show y'all, but it's kind of hard to explain. So the course gets really in-depth into that. So I have a couple examples I want to show y'all. So first off, let's go to this GU I marked up. And once again, please do not mark up the screen. Let's go back and find it. or not GU, UCAD. I'm sorry about that. All right, so this was definitely a longer term play, but tell me what y'all see if y'all want to talk in the mic or y'all want to type. Tell me what y'all see here and why specifically I chose this outcome candle. All right, that's fine. All right, so here's why. Well, first of all, actually, before I see this, if y'all notice my chart kind of has a funky coloring, you know, you see purple, you see white and gray background. That's just a psychology thing that I actually do recommend, you know, try to avoid, I know my volume's kind of being a hypocrite with this, but try to avoid red on the screen because when you see red, it kind of plays with your emotions, it gives it a negative connotation. And remember that trading is a psychology game, so you don't want any of those negative vibes, which is why I have these nice cool colors. But anyway, I digress. Here's what you see. All this liquidity building up right here. So when retail traders, are saying this, what are they doing? Hits this line, they're buying. They expect to hit this line again, they're buying. Hit the line again, they're buying. And actually, you even see a little bit more liquidity forming right here. These wicks signal liquidity. It doesn't look like much on this time frame because it's the hour. But if you go into like the 5 minute, all you're going to see is just a consolidating motion. So then what do you see? You see the impulse move. Large volume body candle shoots down, breaks all that liquidity. Why is that important? Because what's all this liquidity? This is all stop losses. This is where all the retailers put their stop losses. And when this impulse breaks this liquidity and breaks their stop losses, the banks are making money. We trade with the banks. Therefore, when the retail traders are losing money, we're making money. So stop losses make us money, essentially is what I'm saying. So this, once again, this impulse move breaks through all this liquidity. Banks are making money. All the retail traders get stopped out. So what's the third confluence we're looking for? Look at the outcome candle. Right here. What's going on, Ricky? Right here. This is the outcome candle. Remember the diagram I showed you all earlier, this large engulfing candle. And what you want to do, you put your entry on the, whoa, I'm so sorry. You put your entry, bottom of the candle, stop loss at the top. And also one thing I did not mention, if you all want to write this down too, institutional levels. Institutional levels are the levels in which the banks unload their orders. These levels are 0, 0, 2, 0, 5, 0, and 8, 0. You want to try to get your trade to fall on one of these lines. As you can see right here, this falls right on this 0, 0 line. So always try to get your limit on an institutional level. And also the 0.5 works. And of course, stop loss, I put it up a little bit just to account for spread. So what happens? Come around over here. Price came up to hit it right there, and then it fell. And that's how this works. Probably a better time frame, which I can show you this all on, but yeah, it's kind of looks, you can't really see it from here. But yeah, price came up, hit the institutional level, hit that outcome candle, and it fell. Got another example I marked up for y'all. I think it was UJ. Let's see. What's going on, Andres? Maybe it's 4 hour. Yeah, there it is. And I'll go on replay for this one just so y'all can kind of get an even better view of it. All right. So y'all see all this right here. What do you see? Plenty of liquidity. Well, delete that. Plenty. Wow. Sorry about that. Let me make this brighter for y'all as well. Plenty of liquidity. Price is coming, hitting this line, going back up. Retail traders are going crazy right here. But what are retail traders doing about this? Right here, all stop losses. If the price comes down here and hits right here, risk traders are losing money. So what do the banks do? The banks see all this, right? So here's the outcome candle, and here's the impulse that's beginning to break liquidity. Just like that. All these research traders, they have lost money, all of them. Banks have made money. So what are we expecting price to do? We're expecting price to come to this outcome candle. Remember the diagram I showed you at the beginning? This is what the outcome candle looks like. We're expecting price to come up, hit the outcome candle, and fall again. And of course, we're going to put your lines on the institutional level, 0020, 5080. Stop loss at the top of the candle. Maybe a little faster for y'all. Right there. Look how clean that entry was. Weight entry, and it fell. And that's how this works. So is the OC the breaker candle or the candle which grids engulfs? Breakers are something completely different. The OC is the candle that gets engulfed. Let me go back to the diagram earlier. This is the OC right here, the red one, or this one, the green one. The candle that gets engulfed is the outcome candle. Breakers is something they're going to go over that in the course. It's kind of, that's more in depth. Yep, of course. Think I had one more example for y'all. Let's see. Oh yeah, this is a nice one. I actually didn't catch this one, unfortunately, because I simply was not looking at my phone, but it happens sometimes. Go to the replay feature. All right, what do you see right here? Plenty of liquidity, nothing but liquidity. Wicks, Earth sign liquidity, or just regular tops and bottoms. You see this price continues to bounce on this level, nothing but liquidity. And once again, under that liquidity, retail traders stop losses. We make money off stop losses. So I didn't back it up farther enough, but look right here. Here's your outcome candle, and you can't tell the outcome candle until after the impulse move. That's a mistake that I see people making often. They'll see an engulfing candle and assume it's an outcome candle, but you got to wait for the impulse move to make sure that move breaks liquidity, because you don't want to just pick a random engulfing candle and assume it's outcome candle. So, whoa. All right, so look at that impulse move. Price slammed through that liquidity, and it continues to fall. So what are we expecting the price to do? We're expecting price to come back up to the outcome candle. We have a limit set right here on this institutional level. Let's see what happens. Look how clean that was. No drawdown. And here's the beauty of this, right? Oh, I can't see it. We risked about 7 pips. Look how far this move is falling. 85 pips. See, this is the beauty of the smart money method. First of all, you do not have to sit in front of the charts all day because you set your limits and you go. If you're busy, I'm in school personally, I'm busy. I don't have time to look at the charts all day. So I set my charts, I go. And with a risk to reward like this, and as long as your moves are valid, you can't lose, because when you're risking 7 pips for 80 pip moves, you can lose 5 moves and you win 1, you're still in profit. That's the beauty of this method. What's going on, Nick? That's the beauty of this method. That's why it's my favorite method. I'm very thankful that I came across it. And this is just a basic rundown of the smart money method. Now, the course also teaches Wyckoff, which is just all about the market schematics. I can just a 10-second rundown on that, but I'm not going to get too much into that. My main thing is smart money. You know, when it comes to others, I'm decent with Wyckoff, but I'm not as comfortable as I am with smart money. But this is essentially how Wyckoff works. Accumulation, markup, distribution, markdown, accumulation, repeat. And between, Reaccumulation, which looks like flag. Redistribution, which also looks like flag. That's just it in its simplest form. There are also specific points, like you have your preliminary support, your buy climax, sell climax, secondary test. The course gets really deep, in depth in that. Even the free group gets really in depth into that. So I recommend checking that out, because once you know which way the market's going with Wyckoff, you just use smart money to find your specific entries. And once you have those two, you're winning. It makes trading very easily. So now I'm gonna go and take your questions. I'm actually gonna unmute everybody so I can just hear some of y'all's questions. All right. Well, y'all gonna unmute yourselves. All right, go ahead and ask you some questions if y'all want to talk or type in the chat. A referral link to sign up. I got y'all. So, outcomereach.com. Not outcome.com, excuse me. And yes, we actually get a referral link to sign up. So let's say that, hey, you're in the course. I know my mama's cousin's friend is also kind of interested in learning Forex. Once you do is, we each individually get referral links. So if you can get someone to sign up under your referral link, you get paid, and you just got paid to sign somebody else up. All you did was get paid through your word of mouth. After the course, how often do you do group meetings? What's going on? All right, so after the course, how often do you do group meetings? We have usually at least a Zoom meeting. I'd say maybe once every other day, if not every day. And even let's say there's a day where we didn't have a group meeting. All you had to do was just that's it. We also have one-on-ones. So let's say if I had a specific question, which is really the best part about it, in my opinion. If I had an overall specific question, I would just set up a one-on-one with Dylan, Matt, Geoffrey, Tyler, knowing, okay, I have a specific question. They can kind of help me out with this. They're usually about 20 minutes each. You just schedule it usually a couple of days in advance. They hop on and answer your individual questions. Even more knowledge in 20 minutes, which is probably my favorite part about that. So yeah, this is the website right here. You have your login, sign up. They offer all this stuff. Really good stuff. Check out the website. The link is outcomereach.com. I will send it in the Discord. All right, there was a question up here I missed. GU level that OC 2.4850 errors count as OC because it's half impulse. All right. Let's see what you're talking about. 2.4850. I'm not too. Let me go back to the markup I had. I can't really understand that. Here it is. Oh, that is the wrong time frame. I apologize. Sorry about this. I'm trying to find it. There it is. Okay. Sorry about that. It's also still the wrong time frame. 2.4850. Yes, it's OC. It has the impulse. You can see. I know this is the wrong time frame, but you can still kind of see it. You have all this liquidity right here. Here's your impulse. Impulse broke all that liquidity. All these retailers right here, they lost money. So yes, that is correct. That is an outcome candle. Although that's still the wrong time frame, is the 1 hour, but yeah, you get the idea. Here. Yeah, they're all recorded. So yeah. All right, what other questions y'all got? Oh, how to get rid of this marking up? I don't know how to get rid of it. Can you go over the entry off the OC using bank? Oh yeah, the institutional levels. All right. So here I actually have this for y'all to screenshot. Here are your institutional levels. Now, what are institutional levels? Just once again, I'm not a good speller. I apologize for this. All right, so what are institutional levels? Institutional levels are the levels in which the banks make their orders. So whenever you set your limit, you always want to set it on one of these levels. It just, first of all, it'll go ahead and count the spread for you, which is one thing I've noticed. Two, we want to make sure that we're trading with the banks as much as possible. So these are 0, 0, 2, 0, 5, 0, 8, 0. Those are your institutional levels. And let me go back to the GU example so I can show you how it fell on the institutional level in the right time frame this time. Here we go. And let's get rid of this red box. So yeah, when you set your entry, what I always do is I'll put the entry on the line or on the top of the outcome candle / bottom depending, and then I will go ahead and match it up with an institutional level. So in this case scenario, what you want to do is click the trend or the line, hit the setting button right here, and this is how you see the levels. So what you want to do is look, what's the nearest level? It was at 2.3. The closest institutional level, you're rounding down, 2.0. Bam. That's how you do it. Does that make sense, Ricky?
Yeah, thank you.
All right. Vision, can we do a live chat maybe for GU? All right. Yeah, actually, I didn't do any of those. All right. So what we do as far as our chart marking numbers, we do is called the month down, top down analysis, whichever one you do. And this is how this works. First of all, let me clear all this stuff off the chart. I don't need it anymore. Wow. Okay. Yeah, so we'll start with the 6 month. That's at least the one I use. And we'll just go down. So what do you see on 6 months? Nothing really. What's going on, Franklin? And actually, this level right here isn't bad if price happens to go up back to that level. So what I'm going to do is whenever I see this, I just go ahead and I will put like a limit or an alert. So whenever price happens to come back to that area, I'll know, and I can just watch it. Why wouldn't it be distro? It's possible, but right now, I remember we're just trying to go down to the nearest. So let's go down to the month. On the month, here's what we see, a clear downtrend. And here's the beauty of smart money. I know we've all used trend lines before. We still use them. So you see on the monthly, it's in a downtrend. Actually, no, one of the other students, Wyatt, what he does is really cool. He leaves notes on the top of the corner, and he will just write, what's going on each time frame. What's something I haven't done yet, but it seems really helpful. So 6 month, possible distro, can't tell yet. Month, it's on the downtrend. Weekly, let's spread this out a little bit more. Yeah, also on a really clear downtrend. So another key to smart money is that you always want to trade with the trend. It's 80%. 80% of your trades are going to be with the trend. Only 20% are reversals. So be sure you're not just looking for reversals, because when you trade with the trend, you have a higher accuracy rate. And what it looks like right here on the weekly time frame, anybody notice anything? Type in the chat if you notice something. I see something. Looks like this outcome candle activated. Because look at this. Look at all this liquidity right here. All this is liquidity. Give y'all some color change too. Impulse slams through that liquidity. Retail trailers, they're ticked off right now. And what do we have right here? Massive outcome candle. So looks like it's already activated. Now, because this is a higher time frame, you can do the midpoint. Remember this, it's not for 4 hour and above, it's for your midpoint. You do not want to look for a midpoint trade on the 15-minute time frame, because it doesn't work, to say it simply. So it could go for right here, it could go for that midpoint. Why is midpoint important? Because in the higher time frames, banks want to lower their risk. So it's just they use the midpoint sometimes just to lower their risk. All that is. So what I'm seeing right now is that price could continue to just fall, or price could come to the midpoint on the weekly time frame. Let's go to daily. This is how you mark up all our charts. And let me give y'all some color variation. I'm not liking how all that looks the same. But this is where the stop loss was. All right. So seeing actually a little bit of liquidity forming right here on the daily time frame. If price goes down right here, comes down right here, well, that forms liquidity. So in that case, what happens when liquidity forms? We want liquidity to break. So that also raises the possibility that maybe it comes this outcome candle. It will break the liquidity. And let's look at the trends. Well, nice distribution schematic right here. Let's go. I have the 8-hour up. Not everyone does, so let's just go to the 4-hour. By the way, I highly recommend TradingView Pro for the back testing feature on the smaller time frame. Do recommend. All right, let's check out what's going on in the 4-hour. I mean, 4-hour actually looks to be going on a bit of an uptrend, like also a little itty bitty accumulation schematic, nothing major. Yeah, okay, so on the 4-hour on the smaller time frame, it's beginning to look like an uptrend. Let's go to 2-hour. Also be wary that smart money can be used on any time frame, but the banks usually make their orders off the major time frame. So 15-minute, 30-minute, hour, 2-hour, 4-hour, daily. You're not gonna. The banks don't really look necessarily at the 3-hour time frame. But I just have that up for reference. All right, 2-hour time frame. Yeah, once again, it's gonna be an uptrend. Interesting. Also kind of a large consolidation move. All right, 1 hour. So since all this liquidity is forming right now, there are two possibilities I'm looking at. Price could break the liquidity, go up to that midpoint possibly, or price could fall. So right now, I want to see if price is going to break this liquidity, which is this blue line, which I have marked. And once I see that, that's when I'm really going to be looking for setups. That's just me. Possible move right there. Yeah, so if anything, my possible move is going to be right here. Why? All this liquidity is going to break. Liquidity. Oh, sorry about that. And even more liquidity. And actually, this one is unique because the outcome candle actually broke the liquidity. So this is a move that I'm going to be looking at just for GU. Guess I'll check in later, see how it works. Stop loss to close the candle, of course, per usual. Now let's go ahead and go over the institutional level again. Let's see. So I start by putting my entry right here. Then I go to the settings button. Do this. Now 6.5 also kind of works. Sometimes that 0.5. Let's see if we can get it to the 7.0. Yeah. All right, so that's what I think for GU, my possible move. All right, y'all got any questions?
All right. So how do you determine whenever you have a accumulation or a distribution set up? So I know usually it goes off of consolidation after a big push, either up or down. But in certain times, I think it's accumulation when it's just an OC. I'm seeing like a you know what I'm trying to say, a smart money concept instead of Wyckoff.
Okay, so smart money and Wyckoff go hand in hand. So you look for smart money inside the Wyckoff schematic. I think what you're trying to say is you think it's accumulation, but sometimes it could be redistribution. Is that what you're meaning?
Right, in a sense, it was basically like, sometimes I see either accumulation or distribution when it's not that. It just looks like it.
Okay, yes, you're having trouble saying, okay, is this really accumulation distribution or is it not? So you're just having trouble like fully identifying.
Right.
Okay, well, actually, I have something different in the way I can use to show you. General Electric, this is a stock, but you know what? Why not? Because Wyckoff is potent on stocks, in case y'all did not know that. Go on the daily. This is an excellent example. And by the way, when I'm looking for my Wyckoff, it's hard to see with the candles, so here's what I recommend. I'm sure what the others recommend as well. Take it off the candles, use the line chart. That'll instantly help you out right there. It'll uncloud it. If you can see your specific points here on the line chart, then you can really tell. So this is pretty much a textbook accumulation setup. One of the people in the course sent this. So this is your accumulation setup. You see your sale climax right there. Then you see the automatic rally. You see a secondary test. You see an up thrust right there. This is how you know this is a really nice setup. So what you would do in a scenario like this, and once you get in the course and get more in depth in the Wyckoff, there's a specific phase that you want to enter into the market. So once you enter in that area where you're looking for setups, that's when you would change it to the candles. You would zoom in, and you would look for an outcome candle, and that will be your entry. Don't look for outcome candles and then say, okay, wait a minute, let me look for this. Now, what's the market looking like? You want to know which way the market's going before you look for outcome candles. So you want to look and see if it's an accumulation distribution first. Does that make sense? Yeah. Yeah, so that's how that works. Look for the market or what the market which way it's going in the higher time frame. Look for entries in the lower time frame. Look for entries using smart money. What other questions y'all got? All right then. Well, I hope this was helpful. Here we go. I think that's the hardest part, figuring it out as a newbie in terms of Wyckoff. Yeah. So what I recommend is just back test it. Just go in a line chart, and when you're having trouble identifying Wyckoff, step away from the candles. Just hit this button right here, go to line, use that to find it. That's the easiest way to really get a handle on Wyckoff. Once you can identify a Wyckoff schematic, then you want to practice looking for entries. Remember, eat an elephant one bite at a time. Practice finding Wyckoff, then practice making entries on Wyckoff. That's something that I kind of struggle with at times too. So that's one of the things I'm actually working against right now to back test. Is there any other questions, y'all? It's actually a possible move on AU right there too. All right. Well, I hope this was helpful. I'm gonna go ahead and it was recording. I'm gonna go and see what we can do with the recording. And yeah, I hope everyone has a good evening.